Those of you who've heard me before will remember that I have a very, very simple investment philosophy, which is to buy good businesses run by competent and honest people and buy them at a price which leaves enough margin of safety for mistakes as well as bad luck. If you had 10 million pounds today and you were buying a business in London, what would you want to do? You would want to go look for a good business, hire the best people to run it for you, and buy it at the best possible price. I just try to do that in the stock market.
Nitin, the investment manager, is very different from most investment managers, I think, these days. He's very value-driven. He looks for very lowly priced stocks that have good potential to grow from those levels. It is also a trust which stands apart from others in that it will be quite often performing in periods when other more traditional trusts are not performing.
Sitting here, you might think Asia is one big block. It is anything but one big block. It is an extremely diverse set of economies which are moving at very different pace. There are economies like India and Indonesia which are still very young and building a big middle class. On the other hand, you have economies like Taiwan, Korea and Singapore which are aging faster than Europe is aging. So you have a multi-speed economy, and this allows me to play all those different dynamics in these economies.
The board and I think that AGMs are really important. They offer investors the opportunity to come along and meet the fund manager. He stands and he takes questions, and he also presents on what he's been doing with the trust. That's something which is quite difficult for investors to access face-to-face.
As you can see, it's a very well diversified portfolio mix. And I've always said that I have a kind of a rule of thumb that I don't want any single country to be more than 25% of the portfolio. And the reason for that is very simple, that you can always have bad luck. You know, we could have a disease break out in Indonesia, we could have a bigger trade war in China, we could have Mr. Modi lose elections in India, and then I'm standing here and making excuses about more bad luck. If we have 50% in one country and that country gets hit with bad luck, I'm making excuses, and I don't want that. So, given the opportunity set of 18,000 listed companies across Asia, I do not need to focus all my energy and all my money into one geography or two geographies. We have enough stocks to buy across the region, and that kind of gives you enough diversification for macro risks that different countries face.
You can buy the trust from most of the big UK platforms, as a retail investor. So it's available through Hargreaves Lansdown or Interactive Investor, which has recently merged with Alliance Trust Savings. Of course, you can buy it from Fidelity itself, or indeed all of the retail brokers.
The price-earnings ratio of the fund as a whole is the lowest it's ever been. And that gives me confidence that the next 5 years in terms of returns for us should be better than the last 5 years. I know it's a big statement to make and I shouldn't be making a market forecast, but that's my sense, that your compounding is driven by the base at which you buy. For anything to compound, you have to start with a base valuation. The base valuation is now really, really cheap. And we've been able to do that without sacrificing the quality of the businesses, which means the return on equity on the fund hasn't gone down, but the price-earnings ratio of the fund has come down a lot, which is now telling you that we're buying similar quality businesses at much, much cheaper prices.
There are a number of ways you can hold Fidelity Asian values. So a junior ISA could be a good way if you're investing for your children or for your grandchildren. You may well have already set up a child trust fund, so you can invest through that if you like, or through an ISA, or a SIP, a self-invested personal pension, or of course through a GIA, a general investment account.
The last point I would make is that the stock market has also taken note that we might be coming to an end of the economic cycle, so the markets are down a lot, and that's throwing a lot of opportunities to buy good businesses at very good prices. There is a very famous saying that you make your money in a bear market, you just realize the profit in a bull market. So the decisions we make now will decide our returns over the next 5 years. And I can assure you that me and the analyst team at Fidelity are working extra hard to try and find you those opportunities.